Hello, traders. This is Blake Morrow with ForexAnalytix, and you are listening to the week ahead for February 26, 2017. And I want to welcome you to the video. And I'm glad that you guys are all here listening in. If you recall last week, our last week's video, we talked about how mixed of signals that we had for the dollar. Nothing's really changed this week. If you look at our traffic light page for the dollar pairs, you'll notice that it's just a jumbled mess. I mean, we have some bullish signals on harmonics, some bearish signals on candlesticks, a lot of neutral signals for basic technical, Elliott waves up and down, and there's no real clear direction in any of the dollar pairs. So not a lot has changed between last week and this week. And I mean, if you think about it, it's like, okay, well, do I want to buy the euro? Well, we got French elections coming up. We've got some, Greek debt issues. You look at the cable and you start thinking, well, Brexit, how's the market going to take a hard Brexit over the next couple of months? You look at the Pan-Pacific currencies, the Aussie and the Kiwi, and you go, well, the markets are pretty elevated. If there's some risk off, how are those going to react? The Swiss franc, you think about, well, if people want to search for safety, maybe they'll come back into the Swiss franc despite the rates that the Swiss National Bank, the negative rates that the Swiss National Bank imposes on the market. People might decide, hey, I want to seek shelter there. The Canadian currency, you have choppiness in crude oil, so there's not a lot of clarity there either. And you think about, where do you want to be with the dollar, and where's the right place, or where's the right place to be in? And I don't think there's a clear answer. And looking ahead, even into the following week, there's not a lot happening that suggests that I or you should be aggressively long or aggressively short the dollar. I think it's very choppy waters, and you can see it in most of the charts. But I'm starting to see a little bit of clarity in the markets after doing some soul searching, or better yet, some analysis today. I was looking at the yen pairs, and I want to take you over to the first and foremost. I'm going to take you over to the dollar yen, okay? And one thing that I've noticed is the dollar yen has not been able, to sustain any rallies when the stock market rallies. And that's a risk. Most people, for many, many years associate the dollar yen strength and weakness with risk on, risk off. As stocks go up, dollar yen goes up, so on and so forth. If it goes down, the dollar yen will go down. Well, the dollar yen's had a hard time holding on to any bid, and you can see that the dollar yen's approaching some pretty key support. This horizontal support from highs that we saw last summer, that's really been very supportive of the market as of late. But take a look at the weekly chart. Now, if you go over the weekly chart, you'll also notice that if you take the low from 2016 to the highs of at the end of 2016, we're nearing the 38% retracement that comes in at 111. Okay, what's the significance of that? Well, the significance of that is that, again, the dollar yen hasn't been able to hold up well, and the dollar yen is showing, and you can see these red candles. These are weekly candles. Long wicks up top. You can see long wicks up top the last 2 weeks, which tells us that the buyers can't sustain prices, and it eventually slumps towards the end of the week. Happened this week as well, which means that anybody who's buying the dollar yen for the last couple weeks just not getting paid, and instead they're ending up near its lows. So the risk is that, how about if we start breaking through this 38% retracement? Okay. Well, why? Why would the dollar yen do that? Well, I could look at a couple of things, but one thing that jumps out right now is the 10-year Treasury. If you look at the 10-year Treasury, which, by the way, the market is aggressively short. Everybody thinks that the bond market top is in. We have a big double top. You can't see the other high here, but it goes back into like 2013 or 14. I can go back and look at it later. But everybody's been aggressively short this 10-year, and you can see how we're starting to rally. So as the bond market rallies, and you can also take a look at the 30-year as well, you're seeing bond yields drop. And as yields drop, one of the stronger correlations out there is the yen tends to strengthen. That means the dollar yen goes down as yields go down. Okay, and so we got bonds going higher, yields going down, and that could be one reason why the dollar yen is going down. But then, I'm going to take you over to the dollar yen here, and you can see here's the daily chart, the one that we'd already looked at, and I'm going to actually go over and compare it to the S&P. And when you do that, here's the ETN for the S&P. You'll notice that very strong correlation that we've enjoyed, but you'll notice that we've diverged. The S&P continues to go up, the dollar yen is going down. Now, divergences and correlations that are as strong as this usually don't last, and what happens is they end up correcting, meaning the S&P will either speed up and play catch up to the faltering dollar yen, or the dollar yen may bounce and correct and go higher as long as if stocks are going higher. But we could argue that the S&P right now is at a very elevated level. We're past the 161% extension of the move that we saw in 2015 to 2016. And with that being said, we could be in a situation where the S&P comes down, and if it does, it's probably going to weigh on the dollar yen. Now, the dollar yen, you can say, well, that's the dollar yen, but that's not just the dollar yen, because if you look at some of these other yen pairs, and I'm going to take you over to, let me get rid of this S&P. Let's go over to the Aussie yen. Let's take a look at just the weekly chart. You'll notice that we pivoted off a 50% retracement. Okay, previous resistance right there. Let's go over to the New Zealand yen. The New Zealand, whoops, I didn't type that in correctly. New Zealand yen. Okay, we also stopped at some pretty key resistance, 161% extension. We stalled and right just shy of the 618 previous support, current resistance. We're approaching some pretty key support over here, which if broken, there's probably a lot of stops residing below there. You take a look at the Canadian yen, and I'm showing you all commodity currency related yen pairs, but they tend to be the ones that fall if there's any type of risk aversion. The Canadian yen is approaching some pretty key support as well. And then, we cover some of the yen pairs, but if you take a look at the pound yen, here, I'm just going to take you over to the pound yen really quick. What we saw develop, and you can see we have what's called a pattern in play, which is our educational way of showing you when a pattern develops in the market, like a triangle pattern, that you would have a theoretical entry area, theoretical target, and invalidation point being where a stop would be placed on a typical pattern like this. Well, in this case, you'll notice that we had a triangle and we're breaking down in the pound yen. Now, a triangle could yield the high to lows from here to here, or here to here, or maybe even from here to here. Which I mean, if you start doing the math, and like let's say the maximum move of a pound yen could look something like this, and I'm just doing this quickly for you. I mean, that could take us down towards maybe 130, 129 yen. That's that right there is a 1,000 pip move. There's a 200-day moving average right there. See, what I'm showing you right now is these yen pairs look vulnerable. So the only other piece to the puzzle here is what happens if the stock market actually shows us some weakness. Maybe the yen pairs are where we need to be as traders. As you see the pairs like the euro yen here. Here's a weekly chart in the euro yen. We're below the 38% retracement, or right at the 38% retracement. Will we have some give back in these yen pairs? And again, when I'm sitting there searching for things to do with the dollar, maybe the answer this week or this following week is not the dollar. Maybe it's in the yen pairs. Thank you very much for listening in today, and I hope you guys and gals have gotten something out of today's week ahead video, and hopefully some nuggets or some ideas going into next week. Now, if you haven't tried the ForexAnalytix platform, make sure you do. You can sign up for $1 You can try out the entire system at with the highest tier, which means all the analysis, for 10 days, just $1. So we'll see you next week. Thank you all for listening in. My name is Blake Morrow with ForexAnalytix. Thanks for listening in. Bye-bye.